having the security of having shares and cash, I can make better decisions now. And I'm not trying to like sell something to make money really quickly because I don't need to.
The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us.
What would you do if you suddenly had $100,000?
What a problem to have, huh?
Yes. Quick disclaimer, don't go and copy this exactly because everyone's situation is different. And I know a lot of people recently been messaging me saying they've got inheritances or stuff like that. But hypothetically, what would you do, Lacey?
I'm at the point where I don't need more assets, so I would do fun things.
Oh, okay. What a nice place to be in.
And or things for my children, like investing on their behalf.
What fun things would you do?
Holidays. I really enjoyed that trip overseas.
Yeah. Another mini retirement.
Yeah, it was really good. And actually, it's one of those things with kids growing up. I would love the theory of having a holiday home that you go back to again and again, but I really don't want to be locked into a location. So I'd probably spend a lot of it on really nice accommodation in places where I could gather my family. So renting big homes in incredible spots and then be like, everyone fly here.
Amazing.
Yeah.
What would you do if it was your first $100,000?
Oh, then it becomes very different.
So let's say we're starting again today. We don't have any other assets. We have $100,000. What are we going to do?
So philosophically, I love property. And so I might consider using that as a deposit on a property. However, I think with the risk profiles, that might not be my first response. It's certainly what I did when I was 19. Like if I was reliving my life, I'd do it exactly the same order, get into property first, then get into shares. I think because of the issues around security with the location of property at the moment related to climate change, insurability, all that stuff, I might pick something that was a little bit less risky, taking on debt, for example. So I might, instead of trying to get that leverage, turn that, $100,000 into $500,000 worth of property and then get the gain that's going to be massive later, theoretically, if everything goes according to plan, which it doesn't ever, but you might be lucky.
Yeah, hopefully.
Versus converting it into a bunch of shares that just sit there and keep ticking over and reinvest the dividends into those and see the compounding that way. I might pick shares over property these days.
Oh, interesting. Why do you philosophically love property though?
Because of the leverage.
Yeah.
And because they're just different mechanisms. People often have a really strong preference for one or the other. Often I'll hear, the share market feels like gambling. Oh, you can lose everything, and often that's come from they've watched a family member or they've personally had an experience where they bought shares, they went down in value, they knee-jerk sold, they lost money. It might have been someone who owned Enron, and it really did go to zero. They've had something like that. And then other people will go, I would never buy property. The value is imaginary. It's this fun thing.
So is shares these days as well, a little bit.
Both are. But it's because people don't understand the underlying mechanism.
Yeah.
Property works because of scarcity. More humans, less land. Well, that's that quote from Mark Twain. Buy land, they're not making it anymore. And because of that scarcity, the value goes up. Okay, it's not usually the building, it's the land. So that's what drives property. The idea of the share market is humans are taking raw materials, including our time and our energy, and we're adding value to them. And the companies that we're adding the value to become worth more. That's why the share market goes up. Different mechanisms. So some people really understand that value mechanism in companies, and I guess it becomes really hard, particularly in the last, couple of decades, where so much of it's about a very intangible intellectual property or digital asset. I think that's where a lot of people feel uncomfortable, particularly with shares if they've done traditional investing before. And it was about the mine that the company owned, not the piece of software. So I think that's where some of that unease comes in. But I think the risks with the property now because of the climate change stuff, and am I buying somewhere that might be uninsurable or might be underwater, and do I want to be locked in there, might sway me more towards this. I'm going to trust in human ingenuity, this idea that the company that I'm going to end up having in the stock market is going to continue to add value because humans want to improve things.
And the ability to diversify in shares is massive compared to property. Absolutely. If you have $100,000, you'll buy one property, hopefully. Yes. But with shares, you could buy so many different ones.
Exactly. And your portfolio, the moment you do buy that property, like my portfolio was 100% property for the first, 6 years of investing. And because of that weight, it does take a long time to get it sort of more on an even keel. So yeah, you're exactly right.
And like you said before, this is like your engineering brain. I love it. It's like comparing the risk and everything. I think I look at it more from like my perspective. Like I invested in shares first and then I bought a very low risk, cheap property comparably today. But by not buying too much property initially, I was able to quit my job and like travel and start what I do now, which is now my full-time job. So I think it also depends, like, do you want to grow a business? Is it going to be a lower risk thing like shares that you could sell if you need them? Or do you want to be tied down to possibly quite a big mortgage these days?
Yeah, and that's such a personal decision, right? Your personal priorities and circumstances. I mean, I've got a business as well, but mine didn't break even until like 8 years in. I was very slow and not methodical. I'm not the person to copy with business strategy. I mean, it's been great for the last 7 years.
Engineering business.
But it's because I was on my way to financial independence. I could take
The risk.
Yeah, and I could take it slow. I didn't have to, sign up for anything that I wasn't interested in or go for growth. But I think if you're going to use the business as your mechanism to generate value, to generate future wealth, you've got to have that alongside something else. What we see is a lot of small business owners treat it as their retirement plan. And when they go to sell it, it's not worth much. Think about the people who used to own the taxi licenses. Do you remember? So when you used to buy a taxi license for about $500,000 in Perth.
Really?
Then Uber came in, they're now worth 50 grand.
Yeah, crazy.
So imagine you owned 10 of them, that was your retirement plan, and now you've got a 10th. So I think with business, you've got to be very careful about the market you're producing. You're smart. This won't happen to you because you've got excellent strategies.
I've done it slowly as well. And I built I had like heaps of shares first. I bought my property first. I was always doing that first. And I didn't prioritize. Like I didn't go full time for so long. And everyone was like, well, why don't you quit and try and see what happens? And I was like, oh God, no, what? I like investing too. Yeah. So it's been nice to and then having the security of having shares and cash I can make better decisions now. And I'm not trying to like sell something to make money really quickly because I don't need to.
Yeah. So you get to be more true to your values and stuff. So I think the business is probably very appealing. And it's actually a great way to make money quickly because you can only sell so many hours of your time, whereas when you're selling a product, it's theoretically limitless, right? So it could do a lot more financially for people quickly, but I guess I'm more risk averse.
Yeah. I think with my answer, I'd be like, I put it into shares initially and buy property later down the line. So I had the freedom to change careers, move cities. Because I also liked that I could quit and just go work at the snow because I didn't have a massive mortgage. Like it was quite manageable. But if you have this massive mortgage, then you can't do that. So I think shares and then have the freedom. But some people might love property.
Well, what would you do now? Like this is what you...
Today? Yeah, I would put it in shares probably.
Yeah.
Unless I was ready to kind of settle down in one spot, but I think I like exploring and doing more stuff. So if I was completely starting over, I'd give myself the freedom again to try 100 different things and give things a go and not be locked in and feel like the scarcity of I have to work. What would you do?
So if I got 100K right now, I would most likely put it into my mortgage and then I would debt recycle.
But if you were starting again, what would you do?
Yeah, I was trying to think back to what I did originally. I ended up, so back in Canada, I was investing as well. And we had like a first home super saver scheme as well. So I used the money that I invested and then pulled it out and bought my first property. So I did kind of like a bit of both. So some of my money was invested and then some of my money was pulled out of that investment for my first home. Because back to what both of you have said and what I've also said is in property, you get so much leverage. You have so much growth there as well. So that in Vancouver, and if anyone knows about property, like it grew quite a bit. And at that time, people thought it was ridiculous for purchasing my property because they were like, that's so expensive. But it's never gone down, and who knows what happens in the future. But nonetheless, that allowed me to then end up buying a bigger house here in Australia. It allowed me to work part-time and so forth. So there's a lot there. I think like now, if I was looking at property, I'm working part-time. So I don't even think I could service a loan like fully. And do I want to buy property would be another question. I don't, because then you have more debt and you have to work more and you have to pay it off. Whereas anyway, so there's a lot to consider when it comes to property investing. The other thing that I also thought about as well is if I had additional money on the side, would I start more of a business as well? Like I've talked to both of you about that kind of stuff off the air as well, in terms of, I put a course together last year. I had a bit of a breakdown and needed a break and have totally disengaged from everything. Would I potentially take some money in capital and work on a side project again that I could fund in that way? That might be an opportunity as well.
When you say fund it, would you quit? Like, would it be to give you time? Like, would you quit your job and use that to fund your lifestyle while you built the business? Or would it be to like hire someone or pay for the business?
I think it would hire someone to do things on the side.
Yeah, because my shares thing was more about like giving myself the mental space and time, I guess, to build something myself. That's interesting that you could like keep your job and then also hire someone.
Yeah, I also love my job and I love the security of my job and I love what I'm doing. So it's also like, I don't know, sometimes you swing both ways. You're like, I want to do all these things. And then other times you're like, I really like having a job and then being able to, log out of my email and take a holiday and not have all these people harassing me.
Yes.
So I don't know, because I'm like, we've talked a lot about this. Like, I am pro job. There's a lot of people who are pro running their own business, but I think there's a lot of comfort that comes with having your own job and having an employer and having that security.
And I think you need the security to start a good business. I think that's missing from like the conversation where everyone's like, make your first 1,000 and quit your job and then hire your first employee and live off $400 a week, and like you're not making good decisions then.
And then have financial stress that lowers your IQ by 13 points, and then you don't make good decisions anyway.
I quote that all the time since I heard you say that years ago.
Oh my gosh, that research is everyone, it should be compulsory reading for politicians. Am I allowed to ask a question?
Yes.
So we talked about things that we've all done. Like we've done property, we've done shares, we've done that, right? If you had that 100,000 and it wasn't about like immediately trying to build long sustainable wealth, would you do something that you've never done before? What's one thing that you would do?
Yeah, I'd go to Antarctica.
You go to Antarctica?
Antarctica's on my bucket list.
Okay.
Bit morbid, but I want to go before the world ruins it with their drilling or whatever, and I want to see the cool penguins and stuff.
That sounds lovely.
Yeah, but it's like 20 grand to go. And it's not, I could maybe afford it, but it's not, I'm not quite there to drop 20 grand on a trip just yet.
And how about, is there an investing strategy that you've never tried before that you would dabble in? The reason I'm asking this is I'm wondering if anyone would take up day trading or would crypto or like anything crazy like that.
I buy a bit of crypto, but I don't trade it.
Yeah.
But I've kind of diversified. Like I bought a lot of different ETFs. I've bought like 2 properties now. I've bought crypto. I feel like I've dabbled.
Yeah.
And as much as I want to, because I don't want to ever dabble in a way that requires every second of my day. So I would never day trade shares. I wouldn't do Forex. I wouldn't, like none of that stuff is me because I don't care.
Yeah, fair enough. How about you?
Yeah, no, I wouldn't want to give up that like mental piece that I have, like just checking charts all the time. And day trading does not sound exciting to me at all. I just like, the thing I like about investing and just like set and forget is the fact that I just forget. Like it's so easy, you don't have to worry about it. You can focus on other things that you're passionate about.
Yeah. And how interesting is it that the process that we've been through with our investing has taught us that about ourselves. So now we don't bother, even if the rewards could be much higher, because it's not worth the mental stress, not worth the time that you're robbed, like that. It's this really important thing about needing to start so you can learn these things about yourself. Because if you wait till you've got the 100 grand and then suddenly you pick something and it's not right for you, that's annoying. But if you started with $1,000 and you started learning that stuff about yourself, then you're going to make a better choice with the 100 grand later. Yeah. I know I've kind of gone off topic there.
No, I love that because I kind of went through that as well. I started with shares with the $1,000, and then I did a little bit here and there, but I wasn't really sure. And then I bought my apartment, and then I went back to investing in shares, and I had a few problems in my apartment. I was like, I'm never buying property again. This is like too much effort. I don't like it. But then the returns were just so good compared to shares, and the leverage was really good. So now I've kind of come back and bought another property. But it's been a whole journey of like, do I want to do this? Am I good at it? Do I care? Is it terrifying? And then getting used to it as well. So that's a really good point.
Yeah, it's fascinating.
Yeah. That was nicely summarized.
Excellent.
Yay.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.